Hi, and welcome to today's tax update for July 2019, brought to you in the middle of the summer, right here from a very hot Nicosia. In today's tax update, we will look at the most important tax developments for July 2019. So let's move inside and start the webcast. We will start today's webcast by looking at the most recent developments in local legislation. The tax bill mentioned in our previous webcast for the reduction of the special defense contribution payable on interest from corporate bonds from 30% to 3% was voted into law and published in the official Gazette on the 26th of June. It is important to note that the reduced rate of 3% applies to interest received by individuals and not by companies. Also, the law does not specify whether this applies to corporate bonds issued by Cypriot companies only. Therefore, one can conclude that the 3% applies to all corporate bonds irrespective of whether they are issued by a Cyprus company or an overseas company. As a reminder, the reduced rate of 3% already applied on savings certificates and development certificates of the Cyprus government and interest received or credited to a provident fund or the social insurance fund. Circular 37 was issued recently by the Tax Department relating to the informative guide on benefits in kind. The guide has been the subject of a relevant tax seminar of the Institute of Certified Public Accountants of Cyprus back in January 2019. Circular 37 summarizes the relevant questions that were submitted by the participants during the seminar and the corresponding answers. We will not go through the details as it is quite a long circular, but this is available on the Tax Department's website for you to have a read through. Unfortunately, the circular is in the Greek language only. Another circular issued in July by the Tax Department, Circular 38, relates to the compensation of community council governors. Based on a much older circular, only 50% of the compensation of the community council governors was taxable under the income tax law. In accordance with the new circular, as from the year 2013, their compensation is now fully taxable. Finally, on local developments, during July, we had a very interesting court case decision. More specifically, on the 5th of July, the Cyprus Administrative Court issued its decision on a case with regards to the tax treatment of interest income arising from enforced expropriation, in Greek, apalatriosis, of immovable property. The court ruled that the imposition of special defense contribution on interest arising on the compensation received for the expropriation of immovable property is unconstitutional. The interest should be considered as part of the compensation and thus should be exempt from tax as per Article 12.3a of the enforced expropriation law. Moving on to international developments, we had an interesting case on the interpretation of management control. In a recent decision of the Italian Supreme Court, it was held that a foreign holding company cannot be deemed to be tax resident in Italy if the board of directors and shareholder meetings are held in the foreign country and the company has suitable premises in that country from which to manage its participations. This decision is substantially aligned with a similar Supreme Court decision of 2016 relating to the concept of place of effective management of a foreign entity. In that case, the Supreme Court stated that in order to assess the effective tax residency of a foreign holding company, the tax authorities must identify the actual place in which the operational, administrative, and management decisions of the company investments are effectively taken. Factors like the absence of a significant organizational structure, minimal operational costs, and no invoicing of subsidiaries for management services are not in themselves sufficient to demonstrate that the holding company is not resident in the country where it was incorporated. We will close off today's tax update with a brief reminder of the deadlines coming up. Today, 31st of July, is the deadline for the electronic submission of the 2018 personal tax return by salaried individuals whose gross income exceeds €19,500 and for the payment of any tax thereof. It is also the deadline for the electronic submission of the 2018 employer's return and for the payment of the first provisional tax installment for 2019. And lastly, a reminder of the deadlines for August. The 1st of August is the deadline for the payment of the 2018 tax balance through self-assessment by self-employed individuals and companies preparing audited financial statements. The 31st of August is the deadline for the payment of the second installment of the premium tax for insurance companies for the tax year 2019. As with every year, we will take a short holiday break from our webcast series for August, and we will catch up with you again in September. This concludes our tax update for this month. Thank you for watching and enjoy the rest of your summer holidays.